All right, let's dive into Kotak Mahindra Bank's third quarter results, fiscal year 2025. Got a whole bunch of stuff to look at. We got the press release, investor presentation, and even the auditor's review reports.
Well,
It's consolidated and standalone. So
Yeah, think of this as your, I don't know, like cheat sheet to really understanding not just what happened, but what it means.
what's cool here is that we can actually see like the bank's health and strategy, not just the raw numbers.
Okay, so let's start with those top line numbers then. They're pretty impressive. Kotak Mahindra Bank, strong growth all over the place. Consolidated PAT, or profit after tax, if you're in the know, up 10% year on year, hitting 4,701 crore.
Yeah, and like you were saying, we got to figure out what's making them grow. The investor presentation, it breaks down the PAT contributions, and it shows that their diverse business model is a big plus for them.
Yeah, it's not just your typical banking anymore.
Their subsidiaries are doing amazing. Kotak Mahindra Capital, a huge 170% year-on-year increase in PAT. And then Kotak AMC, their asset management company, 73% jump in PAT. And they've also seen their equity assets under management, basically the total market value of all the investments they manage, rise by 51%. Those are some pretty serious gains.
Yeah, those are really strong numbers. And I think there are a couple things here that we should keep an eye on. First, Kotak Mahindra Capital, they're doing super well. They've been ranked #1 in equity capital markets for 3 years in a row now. This means that Kotak's, kind of like Kotak, their plan of having all these different financial services, not just banking, is really working for them.
It's like they're making almost like this financial ecosystem
Yeah.
where you can get everything all in one place.
Exactly. And the second thing, the growth in their asset management business shows that they're attracting investors who are looking for growth. It goes along with the broader economic trends in India, growing middle class, people want to invest more.
Tapping into that.
Economic optimism. And they're giving people what they want. But we can't forget about the core banking business. How'd they do with that?
Well, their standalone performance it's good. The bank's net interest margin, NIM, is at a healthy 4.93%. Now, if you don't know all the banking terms, NIM is basically the difference between the interest they make on loans and the interest they pay on deposits. Higher NIM usually means they're profitable and efficient.
Well, that's a good sign for the bank.
Yes. And their CASA ratio, that's the amount of deposits in current and savings accounts, is at 42.3%, a little lower than last year. But it still means they've got a lot of deposits, which is important for, giving out loans. You need those deposits to lend money.
It's like the fuel in their engine. And what about those, those NPAs, the non-performing assets, the loans that people aren't paying back? I can really hurt a bank's profits.
Well, Kotak Mahindra Bank, really low net NPA ratio, only 0.41%. So it seems like they're managing risk well, keeping a good quality loan portfolio. So overall, it sounds like a good performance for Kotak Mahindra Bank. They're growing, they're making money, and they're managing risk. But there's this one thing we have to talk about.
Yeah. The RBI's restriction on issuing new credit cards, that was a big deal back in April 2024, basically. The Reserve Bank of India, they regulate the banking sector in India. They told Kotak Mahindra Bank, stop giving out new credit cards because they had concerns about their systems and processes.
Yeah, it's like you're trying to grow in a really important area, and now you can't. Credit cards are a big part of retail banking, and if you can't get new customers with credit cards, it's going to affect your whole plan.
Exactly. And the investor presentation, they talk about this. There's a section called Update on RBI Supervisory Action. The bank is making progress on fixing the things the RBI was worried about, but it's still affecting them financially. They're working on it, but it's definitely a challenge.
It's a bit of a, mixed bag. On the one hand, they're doing great overall, but on the other, this credit card situation's hanging over them. But I guess every story needs some conflict, right?
I think that's fair. They're in a tough spot. And it's these tough situations that really show what a company is made of. We'll see how they react and change their strategy.
Speaking of changing their strategy, they've been busy buying things.
They have.
They're going to acquire Standard Chartered Bank's personal loan book, which was worth like 4,100 crore as of September 2024. And the standalone report, it gives you even more info about all these loan transfers and acquisitions. So what's the big idea here? Why are they doing all of this?
This acquisition, it's a big move, and I think it shows us two things. First, they really want to grow their retail lending portfolio, which has been something they've been focusing on. Personal loans are growing fast in India, people are spending more, the middle class is growing. So by buying Standard Chartered Bank's portfolio, they're getting a jump start in this market.
Yeah, it's like they're saying, okay, maybe we can't issue new credit cards right now, but we can still grow our lending business in other ways.
Exactly. And the second thing, this acquisition fits perfectly with their strategy to be, you know. The one place where you can get everything financially, they're adding another piece, offering more products, making their customer relationships stronger.
So it's not just about size. It's about being smart.
Yeah. And they're doing all of this while things are changing in terms of regulations. The Reserve Bank of India, they made these new guidelines on investment valuation back in April 2024, and that has had, noticeable impact on Kotak Mahindra Bank's financials. We're seeing a big jump in their reported net worth and investment value.
That sounds good.
Yeah.
But can you explain that a bit more? Why did these new guidelines change things so much?
Sure. So the new guidelines, they basically say that banks have to value their investments at what's called fair value, which is the price they could actually sell them for right now in the market. Before, there was more, flexibility in how banks value their investments. So sometimes the reported value and the actual market value were different.
So now it's about being more transparent and accurate.
Yeah.
Making sure the numbers reflect what their investments are actually worth.
Right. And for Kotak Mahindra Bank, this change was a good thing. It means that their investments were undervalued before, so their financial position is actually even stronger.
Well, that's good news for them and their investors. Seems like they're doing a lot right, even though they have some challenges.
They are. And what's really impressive is they can deal with all this complexity and still make strategic moves. They're tackling the challenges, but they're also taking advantage of the opportunities.
Yeah, they're like a chess player, always thinking ahead.
Yeah, I like that.
Yeah.
They're definitely thinking strategically.
So, we've covered a lot. But you're probably wondering, what does this all mean for me? Why should I care about how Kotak Mahindra Bank is doing?
Well, I think there are a few important things to take away, especially if you're interested in Indian banking. First, Kotak Mahindra Bank, they're a great example of a bank that's using new ideas and adapting to change. They're investing in tech, offering more products, making smart acquisitions. They're staying ahead of the game.
They're not just sitting around.
Right. Second, how well they're doing. It shows that the Indian economy is strong and resilient, even with all the uncertainty in the world. India is still doing well, and Kotak Mahindra Bank is in a good spot to benefit from that growth.
Like they're riding the wave.
Yeah. And lastly, their story reminds us that even the most successful companies have problems, like the credit card restriction. But it's how they deal with those problems that really determines their success.
It's about being flexible and resilient.
Absolutely. And that's a good lesson for any business.
Well, we've covered a lot in this first part of our deep dive, but we're just getting started. Stay tuned for part 2. We'll go deeper into some of these things we talked about,
Right.
like the credit card restriction and their acquisitions.
Yeah, and we'll look at how all of this fits into the bigger picture of Indian banking and what it might mean for the future of finance in India.
Okay, so last time we were talking about Kotak Mahindra Bank's, pretty strong performance, but we also talked about that big thing, the Reserve Bank of India, saying they can't issue new credit cards.
Right, like it shows that even when you're doing well, things can happen that you don't have control over. So let's get into the details of that RBI order from April 2024.
Yeah, so beyond just saying systems and processes, what exactly were they worried about? I mean, they don't just, issue those orders for no reason.
No, not at all. The order, it said there were a few areas that needed work, like the bank's core banking resilience, business continuity planning, cybersecurity, and governance. Oh, and their digital payments frameworks, too.
Wow, that's a lot. Sounds like they were worried about their whole digital setup, not just the credit card part.
Exactly. All of that stuff is really important for any bank these days, especially for Kotak Mahindra Bank, because they're so focused on digital growth.
So, what have they done about it?
Well, they've been taking it seriously, working with the RBI, giving them updates on their progress. They've also been spending a lot on technology and hiring people, building up their engineering team to make their systems better.
So it's like they're thinking long-term, not just a quick fix.
Exactly. Trying to build a stronger foundation for the future.
Makes sense. But until then, they still can't issue credit cards. That's got to be hurting them, right?
It is. It's making it harder to get new customers that way, and they're probably losing some revenue because of it. But they're not just waiting around, they're adapting.
Okay, so how are they doing that?
Well, they're focusing on selling other products to their current customers and making those customer relationships stronger, trying to be that one place where people can get all their financial stuff.
Yeah. So they're saying, we can't give you a credit card right now, but we've got all this other great stuff.
Right. And they've also really been pushing their mobile banking app. It's been getting great reviews. It's a good way to reach new customers and give them a good digital experience.
So they're finding ways to grow. Even with this restriction, sometimes limitations make you more creative, right?
I agree. Turn that challenge into an opportunity.
Speaking of opportunities, let's talk about that acquisition we mentioned before. Buying Standard Chartered Bank's personal loan book. Seems like a smart move, especially now.
It is. And remember, we're talking about a loan portfolio worth around 4,100 crore. That's a lot of business. It's a way for them to grow their lending, even without those credit cards.
So it's not just filling a gap, it's being strategic.
Yeah. Personal loans are popular in India right now, and they're trying to get a bigger piece of that market.
Why are personal loans so popular?
A few reasons. The middle class is growing. They have more money to spend, so more people can borrow.
And with online shopping, there are more ways to spend that money than ever.
Exactly. Plus, people are more comfortable with personal loans now. It's not seen as a bad thing anymore, and it's easier to get approved for them.
Sounds like a good time to be in that business.
It is. And they're making a smart move.
But acquisitions can be tricky. Buying a bunch of loans is one thing. Making it all work smoothly is another.
Yeah, that's true. They got to make sure these new customers have a good experience, and they need to use data to understand the risk of these new loans.
It's like they added a new part to their house, and now they have to make sure everything is connected properly.
Right. It's complicated, but if they can do it well, it could really help them.
And all of this is happening while the regulations are changing too.
Definitely. Remember those new guidelines on investment valuation?
Ones that boosted their net worth.
Yeah, that's part of a bigger trend. More scrutiny and regulation in banking makes sense, since banks are so important to the economy.
So it's about protecting the system.
Right. But all these regulations, they make things harder for banks, too. They have to follow all these rules, invest in new systems, manage risk. It's a balancing act.
Yeah. How is Kotak Mahindra Bank handling all of this?
Well, I think how they've dealt with the credit card restriction shows how they approach things. They're not fighting the regulations, they're working with them.
They're being proactive.
Exactly. They're showing that they're transparent and want to do things the right way, which is important for building trust with regulators and investors.
And trust is super important these days.
It is, and that brings us to an important question, something for you to think about.
Okay, give it to us.
So we've talked about their growth, the credit card issue, the acquisition, and the regulations. Given all that, where do you think Kotak Mahindra Bank fits into the future of Indian banking?
That's a good question. Are they going to be the ones leading the way? Or will they follow others?
Right. And we'll talk more about that in the last part of our deep dive. We'll look at the big picture.
Okay, so we've looked at a lot in this deep dive into Kotak Mahindra Bank's Q3 FY25 performance. From, strong growth, regulatory hurdles, strategic acquisitions. It's been quite a journey. But now, the big question, what does it all mean?
Yeah, exactly. And I think there are some important takeaways for different people. First, for investors, Kotak Mahindra Bank is showing that they're resilient and adaptable. They face challenges like we saw with the credit card situation. But their diverse business and commitment to innovation, I think it puts them in a good position for long-term growth.
I think I like doing them, not putting all their eggs in one basket.
Right. They're not relying too much on any one product or market. So that's good for investors who want stability and growth.
And what about the customers? What does this all mean for them?
I think it shows that the bank is focused on digital innovation and convenience. Like their new mobile banking app, they're trying to make banking easy and user-friendly.
It's like they're trying to figure out what their customers need before they even know they need it.
Yeah, and buying Standard Chartered's personal loan book, that shows it too. They're offering more products to be that one-stop shop.
But that credit card restriction, that's got to be frustrating for some customers, right? The ones who want a credit card.
True. It shows that even the big institutions have to deal with challenges and regulations. But I think how Kotak Mahindra Bank is handling it, being transparent, working with the RBI, it should make customers trust them more in the long run.
Yeah, like when there's a road closure. It's annoying at the time. but it makes the road better in the end.
I like that. And for anyone who's interested in Indian banking, Kotak Mahindra Bank's performance gives us a look at what's happening in the industry. We're seeing more digital banking, more consumer lending, and more regulations.
Yeah, it's competitive.
It is. Only the banks that can adapt and innovate will do well, and it seems like Kotak Mahindra Bank is ready for that.
So,
Yeah.
to wrap up this deep dive, here's something to think about.
Okay.
With everything we've talked about, how do you think Kotak Mahindra Bank will shape the future of finance in India? Will they lead the way or follow others?
That's a great question.
It is. Thanks for joining us, and we'll see you next time on The Deep Dive.